Stock and options trading unlocked.
If you want to learn how to make 6 or 7 figures a year trading 2 hours a day, this is the show for you.
We're here to talk about everything trading, weekly news, tips, and special guests to get you motivated and profitable.
Don't forget, everything you hear is opinion only and not to be considered financial advice.
Here are your hosts, Atul Patel and David Picard.
So hey, how's it going?
Hey, doing well. How are you?
I'm doing great, Just was looking over some of the results from today, and one of the members, she did 180% account growth today.
Amazing.
Just
Congrats.
was all over, like she we had the Baba idea from yesterday, and she swung those puts into the close, into that 120 planned short spot, and then today she understood how to plan the SPY SPX trade that we're going to be going over today, and
little Tesla too, right?
And she did Tesla as well, and so yeah, it was a pretty cool day. Sorry guys, the lighting is not as great in this location, but the streaming should be great. I'm wired up directly to fiber today, so hopefully the transmission and everything will be good. And then so yeah, it's been an exciting week. I should be picking up keys to my new place tomorrow, and I'll be sharing that on video once I'm get settled in, hopefully next week.
You excited and ready for the move?
Yeah, I don't know if I'm ready for the move, but I'm definitely excited about it.
Couple floors up, huh?
Yeah, a couple more floors up, but
There you go.
yeah, it's pretty good. It's pretty cool. I think I might be in one of the highest units in the area. So, yeah, yeah, it's pretty cool. So, all right. So we've had a frustrating couple weeks, I think. I mean, you think market mayhem, but we kind of shifted to like market yawn.
Yeah. Hanging out.
I took
within range, waiting for something to happen.
I took some hits this week. I'm gonna be straight up. I took some hits because I was expecting today's move to happen 1 or 2 days ago, and but yeah, that's what process is for, right? You do it, and then you're wrong, but then you have today happen, right? You got to keep applying the same process. It doesn't matter if you're wrong, because you know what the long-term numbers work out to be, right?
That's right.
And today was spectacular.
Absolutely.
Spectacular. I mean, we started off with the calls on Tesla this morning, and then the Baba puts. But really, like, I was like, hey, and it got right to that 770. Missed it, I think, by $1 or $5 or $2 or something. Got really close to 770 target, right? Today. So it's pretty good. So that was pretty good. And then the rest of it was, I had
$3 away, I think.
Was it $3? Okay.
Yeah, I think it was 67 it hit, looks like.
Okay. And I just put that and then put stops and profit orders, and whatever's going to happen. But the big thing was, I didn't know if today was going to be another day like yesterday or day before, right? And I kind of expected that chop. We got in for some puts and then took whatever we had and then got stopped out, and then pretty much went into the waiting game, right? So that's one of the things that for our business, we're kind of like, hey, after the first couple of hours, we know where to position, and then you just have to wait and let things kind of set up. I don't normally like to trade the afternoons. I like to kind of be done, but I was around today because with CPI numbers coming out tomorrow, and today we had, it was just like we were setting up. Like any day now, any minute now, I felt like we were going to have a big move.
And it was part of your plan from the morning too,
yeah,
right?
It was.
You were looking for a certain battle.
I just didn't know if it was, is it going to be start off and right, out of the get-go from the day for the day, or is it going to maybe happen after lunch, right? I didn't know, but it was like, but I had to follow the process and plan that we have, and hey, it was a good day.
Yeah,
So yeah, so it looks like you have a little one joined us.
I do. I have on daddy duty. I'm on daddy duty, and I've been adjusting to that. It's been interesting. Like today, I made one trade. I mean, it's a different animal being at home and having a little one with you, and not, you got to be careful with your stops. I've learned. I made a mistake there, going to change a diaper without having to stop in one time. That was no good.
Okay, so now you're learning. You got to make sure you put that in.
A quick diaper change is never a quick diaper change, is actually what I learned. 15 minutes later, I come back. But no, I mean,
and depending on the baby, I've luckily avoided it. But I mean, not having kids or having to, I don't think I've ever tried to change a diaper. Nope, never had to. So
well, I can help you. Come on over.
okay. I don't need, that's not a goal in my life. So we'll see. I don't need to check that box. But I've seen that, some people, they've had to change their shirts after going
You
to
can get messy.
yeah. Sometimes the kids aren't done when you think they're done. I've seen
That's
that.
exactly correct. That's exactly correct. But no, it's been one thing for me is adjusting, right? When
Yeah.
I can trade, making sure and just being aware of, hey, if I have to monitor it, right? My risk management, adjusting my planning to it. And
Yeah,
it's okay. It's part of it, I
exactly.
ended up having a great day. I was lucky that I, caught your pre-market plan on SPY, to be honest.
Okay.
And I just had some orders there, and I set my risk to really not care what happened.
Got it.
So I
So
was
it's like,
able to just sit in it all day. And then all of a sudden I looked in the afternoon and I was like,
oh,
what?
if you've been it, then you must be really happy.
Oh, I was really happy.
Yeah.
Yeah, I didn't even know.
Yeah,
I
that's
came
even
back
better.
and I looked and I was like,
That's even better. You're like,
my wife actually came back. So I was on daddy duty. She comes back and I walk into here because I was like coming to check, and I'm gonna take her and I'm like, can you move some stops for me? And she's like, I don't know what to do. Give me the baby.
yeah, it was pretty fantastic. So
We got a lot on the plate for today, and we got actually some great stuff to talk about.
we do. With that, let's go ahead and just start jumping into it. We kind of moved right into some of the market madness stuff. We can and how quiet it is. So let's go ahead and move right past that and go into the one.
Up next, $1,000 bets.
Okay, so let's see if I'm able to move this. There we go. Okay, so you can still see us. So guys, so this was the afternoon trade and bet for SPY that the plan, we're going to go into how this was planned, but basically getting in on the 40-70 puts for $1. So if you're doing $1,000 bet, that'd be 10 contracts at $1, and basing it on this rejection of the 410 level. And if you're just kind of like, hey, I'm willing to risk it, kind of like what you did, and you're like, hey, if I can get it for $1, I'll take it. And if it's right, it goes to the 404 target, 405 to 404. That's gonna be, it's hard to believe, but you can, it literally is $1,000 going to $20,000 to $30,000. It's a worthwhile trade, risk reward wise.
Gorgeous.
Right? Or one of the ways, like for me, I mean, I minimize gains all the time, but because I didn't know for this week, if was it going to move today or not, once it tripled, took some off. Now it's a free trade, and I don't have to sweat, right? And so
I mean, I love that being part of the process,
Yeah.
because then also you let the trade happen. It gives you patience to let it pay you.
yeah, then
So you
there's
take
no
a
have to do
third
anything. You
off
can go
for
and
3
do something. Yeah,
times. and then you're going to get 50 times or 30 times or
20
40 times,
whatever it wants to
right?
give you. Yeah. So this literally went, if you could have, got it for like $1 or so, it went to, those contracts went to $50,000 from $1,000. It was just incredible. Like my plan and target was 404, and then it gave bonus round into close, which I sometimes get. Like 404 was the target, kind of like felt pretty comfortable. I'd get that. Technically, given the price action we've had recently, we're really on the 407 break, should be going to 400. So I'm kind of expecting us to see that tomorrow. Anywhere, and then we might even do a little more. So maybe even 395, 397 to 400. But that's one. And then the other one is that, we have our watch list and we have our notes. I have my notes here, and I said, hey, if it breaks 407, then, there should be a lot of downside, right? So if you waited till the 407 broke this afternoon, there was another incredible trade.
Absolutely.
That 407 break was roughly this
By $15.
No, it was $1 and you move it to, you go to the 40, because here's the math, you got to figure this out, right? If the level is telling that, you see the blue line, right? The dashed blue line is 404. Then if I'm getting in the 405 puts for $1.
Oh, the 405. Okay.
The 405s, if it gets to 404, it's going to hit $10. So is it worth risking? Absolutely. So you could have got in for $1, and at end of day, those hit $30, right? And so this is getting in after the whole move and after the range break. So there's multiple opportunities when you can plan the trades out, right? And using the level to do that.
One thing to add is there's plenty of time on these too. I know you switched the chart from the 40-70, but on that one, if you look, there's plenty of time to get in for $1, and especially if you planned it like we did.
Yeah, I mean, it was
sitting there.
The big move happened in the last hour, right after 3 o'clock. The big move happened after 3 o'clock, and all in the last hour. But the prepping, positioning, the patience testing was all in before that.
That's huge.
But yeah,
patience.
I mean, but like, hey, incredible. It's possible, guys. You have to be patient, and you might have to try a couple times. That's what the whole 1K bet concept is about, right? You might lose $500 or $1,000 2 or 3 times, right? But when you're patient and you keep applying the same process, and then you get this, say that you only took it to 10x, right? You're wrong twice. You still made 9x, right? I'm not going to go too much into the numbers, but the point is that's how it works, right? That's how it works. That's how momentum can pay you, right? And that's what our business is all about. How do you build a momentum trading business? And so anyways, it was just a spectacular day. So that's the 1K bets. Let's we have a lot to talk about with regards to planning trades. So and then I know you're on baby duty, so I'm kind of rushing today a little bit, guys. So I apologize. But let's jump right into it.
She's quiet for now.
Up next, tip of the week.
Come on in and pretend she's not here.
Okay. So let's talk about planning trades. David, what's your thoughts on planning trades?
I mean, imperative. It's just one of those things you have to do. The way I look at it is, if I haven't planned the trade, I shouldn't be taking it. For me, I see something I like, and, even if it was someone else's idea, if I can't quickly evaluate it, make my own trade that applies to my account, my risk tolerance, my style, it's not for me. Planning trades is a must in my business. It's a must.
It's kind of like it's kind of like the work you do, right? That's a big part of our work.
Yeah.
Is to do analysis and plan trades.
I get paid for planning trades. I don't get paid for chasing. That's what it comes down to.
Right. So let's talk a little bit about what do unplanned trades look like, right?
Ooh.
So
So
when
those
you,
are fun.
right, like
We've
when I
all been
don't plan
there.
a trade out and execute to the plan, I have a significantly higher loss rate. Okay. And then I've also made a lot of more mistakes where my account gets hurt because I'm taking trades that I didn't plan, right?
Significantly more emotions on top of it.
A lot more emotions. The rewards aren't usually as good or there. Um, it's so what does that look like? FOMO, like fear of missing out. And then it comes back against you, and maybe because of the FOMO emotion, you have too much size, right? That's the second one, oversizing, right?
Brutal.
And because you're it's not a plan,
Oversizing is a killer because it usually kills your trade. You're
and
not
maybe even your
mentally
account.
prepared for it, which means you may get stopped out before the trade works because you're not going to let it play out to your thesis, right?
Because you're sizing too big. You want your size.
Emotions get you.
And emotions get you. You're sized where your risk should really be maybe $5,000, but you're trying to risk $500, like, right? And so you're gonna get stopped out, right? Because you're oversized and you're not planning, and you're in it the wrong place because of FOMO. And so you get stopped out, and then your later works, and then you're irked, and then that may trade, revenge-itis.
And then you revenge trade that by oversizing again in the wrong
and then you
trade.
just get wrecked, right? So just got to stop that nonsense, right?
Vicious cycle.
Really, really need to stop that. So yeah, the stopping out and then averaging down. That's like a big account killer I've seen it happen to people, where they kind of get in, they're sizing maybe appropriately, but they're so stubborn that they're like, okay, that's okay, I can get in here, and then if it pops, I'll just average down. I've seen that happen a lot.
It's gonna work.
It's gonna work. It's gotta work, right?
Gotta work.
And then it goes again against you, and you're not honoring your stops, and then you average again, and that's where something that could have been a $500 loss turns into a $15,000 loss. I've seen that.
Yeah.
And so, it's again, you may have had a plan, might not be the right plan, or you shift it from a planned trade to an unplanned trade because you're not honoring your plan, right? So you didn't honor your plan to stop out. It now turned into an unplanned trade. The other thing with the thing, you don't plan it out, so you don't know where to exit. How many times have you guys been in trades? Oh, I'm sorry. I should head over to the YouTube channel and make sure that if anyone's typing anything that I
No questions yet.
okay. So if you exit early, right? And then at other times, because it's not planned, you don't know where to get out, you exit late because you're kind of like you're just not planning the whole trade out, the way that the trades move, the way that they lag. They're not straight lines. A lot of time there's give and take.
There's a rhythm to it.
There's a rhythm, and
I think all of these things we're talking about just cause an array of emotions that cause further unplanned trades and rule breaking that end in account destruction at the end of the day.
Absolutely. So if you're having problems with this, speak up. Let's see if you're, feel free to type into the YouTube channel chat and share any of your stories, and I'd love to read them out. Like
if any of these resonate with you and you need help with them, let us know. We can talk about it. Let's
talk a little bit about it, right? Like the FOMO or averaging down, exiting early, exiting late. There's all different kinds of ways to manage a trade, right? And so that's what we'll be talking about next week is about trade execution and managing trades. But it's really, really important, guys, to move away from these 6 things that trigger, it's a vicious cycle when you go into unplanned trading.
Yeah.
And if you're
So,
want to break that cycle,
and these
talk to
things
us.
aren't always self-recognized.
Yeah.
So let's go over a couple of examples to talk about how an unplanned trade may occur and what type of emotions and bad decisions come along with it.
Absolutely. All right, I have the next slide up. Unplanned, the first example. So, how many people are using alert services, right? I know a lot of people do, and a lot of times is, especially when people are new, they're just following alerts blindly, right? So you get the alert, and then by the time the alert gets to you and the person who alerted it, what time the price they got it, it's usually already moved. And so you're buying it, a lot of folks are buying at a higher price than the alert. And then you might get excited because this person's usually right. And maybe size too big on that alert. Maybe you had other things that are happening during the trade. And then maybe you're like, okay, you get in at a certain thing in your size big, and this is what we were talking about earlier. You don't want to risk more than say $200 or whatever your number is, right? But because you're sized big and you're at an entry that's later than the person who alerted it, you've just kind of got in without a plan, right? So should it be a surprise when you have an unplanned trade that you got stopped out and you lose on the trade?
Shouldn't be.
You should not be surprised at all, right?
It actually makes sense, right?
You could almost bet on it in a way.
Yeah.
And so the that's one of the examples. Do you have anything you want to add to this, Dave?
Yeah, I mean, I think it's just perfect. I mean, I think this is a great example that is common with a lot of people that we talk to and a lot of traders I know, right? They see an alert, they get excited, they think it's going to work, whether they believe in it, they look at the chart themselves and agree, or whether they're like, this person's last trade made me $1,000, so I'm going to take it. They get excited. Right?
Yeah.
You're thinking all these things, these emotions. And then, like you said, now your size too big. It doesn't fit my account. Boom, risk gets hit fast. Stop out. This is probably a market maker's dream right here.
Oh, yeah. Oh, yeah. They love folks like that. Okay, so we have unplanned too.
What do we got?
So you feel like a stock is going to go up today. So
You feel it?
yeah, I just feel like, hey, you know what? Today Apple's going to go up. Market is going to go up today. So I'm just going to go ahead and get in. And, if it dips, I'll just keep averaging in until it works. I knew a guy who would trade, and the way he did it is like, hey, I think this is what's going to happen. And he'd get in, and he gets in and he's like down $1,000. He's like, oh, that's fine, right? My goal is to make maybe $4,000, so it's okay. And then I'm going to add an average in, right? Because I know that eventually, so that it goes down again, and then it goes to another level, and he adds to it, and now he's read about $3,000, and then he's like, okay, but I know I'm going to make money because of this is going to bounce eventually. And then it drops again. And now he's like really leveraged in. And he's down maybe $14,000. Right? But he's like, that's okay. Because I know this is going to bounce. At some point, this is going to bounce. And this was his process. And so he'd be down like 14, 15 grand. And then, of course, at that point, it's kind of like it's moved so much that there needs to be some sort of retracement. And then it bounces. And then it bounces to the point where it's not over his original entry, but it's just bounced enough that now with all his averaging, he is up $4,000.
Woohoo!
And then he gets out. And, if he stayed in, he might have actually made 20 grand or more. But, the point is that sooner or later, that bounce isn't going to happen. It comes down to size management and stops, but does it make sense? Okay, at what point, like at some point you're going to get into a trade where you get in, it's a falling knife, some news is out and it's not going to bounce, and it may not bounce for a couple weeks or months or years, right? And if this is the process, you train yourself, what happens when it gets to minus 30,000?
Yeah.
Then you move to the point where I can't exit, I can't take this loss. And then depending on whether or not you're leveraged or anything else, your planning was to make $4,000. You're down $30,000. And you're like, I don't know what to do. I can't do anything. And then I've seen that goes to minus 50,000, right? Like, and you're just like, I can't take the loss. Right? And this is a common situation that I think people get themselves into by not honoring stops and just saying, if I keep averaging until it works. And then sooner or later, it may work. It may work for 4 times or 5 times. It may work 10 times.
Then you're going to get blasted.
But at some point, it's going to blow you up. I believe.
Oh, for sure.
Right?
I 100% agree. And I think there's 2 things here to look at. The tactic being used is averaging until it works. But I also feel, right? Yeah. It's that whole unplanned feeling. This word "feel," if that sounds like a lot like hopium, right? Well, and it's kind of someone being like, it's got to work. It's got to work. I'm attached to this. Yeah. Instead, we don't need to be married to our positions. That's the best part. Guys, technology is so advanced. You can get in and out of a trade in seconds. You can get back in it. It's a commission away. What's it cost you? $1?
Yeah.
You know what I mean?
You're wrong. Except that you're wrong. I don't like sitting in red, so I'm going to be wrong. Take the $1,000 loss. I still, have a budget for whatever the loss is, and I'm going to reposition and try again later.
If you like it, look for the right entry, right? This is all about planning the trades. The whole point is, if you do this and you catch yourself, just cut it small. Yeah. And plan out where you actually like this from and make it make sense.
Look for levels. Look for price action to confirm your thesis, right? Honor your stops. Manage your risk, right? Because that's what's so important for this. It's what's wrong is everything. You're not using price action to help dictate. You're not honoring stops or managing the risk, right? Yeah. Okay. So if you average in as part of the plan where you take a starter, that's fine. You take a starter, then you average in, or you're actually adding.
I like calling those. I like terming it differently. I think averaging down is a bad strategy. I think scaling in is the correct term for it, because that's kind of a planned versus like averaging down is usually unplanned.
But at a certain point, you have a max stop loss that you honor as part of that averaging process, right? So as long as you have it, that's okay to average, but you have to honor your stops and your max loss, right? Because if you're wrong, you're wrong. If you keep averaging, it may eventually work. It may blow you up. Right? There's better ways to, I believe there's a better way to run your business than that. Mm-hmm. So let's move on to the next one. Okay, this one I've seen. Catching a falling knife. Something just dumps, and say something was $100 and suddenly it's $60, right? And you're like, oh, it can't go any lower. This is incredible. I can't believe I'm buying this at $60. I'm going to buy this dip. Next thing you know, 5 minutes later, $55. And you're like, nah, it's okay. It's going to go back up. Then it's $50. I've seen this. I've seen this happen. I think, who was it? On Sava, where people were like, oh, it's going to go back over 100. I don't even want to look and see where it's at right now. And a lot of people got smashed, but they're trying to buy that dip and it's a falling knife and you try to catch it and you get wrecked. And so again, it's an emotional reaction as opposed to something planned and learning and applying price action and rules and then accepting that when you're wrong, you're wrong.
Yeah.
Right. And so, yeah, I mean, these are all kinds of things that happen when you are reactive to news and not planning trades, right? So I think with that, let's talk about, what does a planned trade feel like?
The good stuff.
Yeah, like what does it just look like? What does it feel like when you're planning a trade? I'm a pretty good idea where my entries are going to be. I have a pretty good idea where I'm going to be exiting. I also know what my size is going to be, right? It's all, I know all this ahead of time.
You're also okay not getting into the trade.
I also,
if it doesn't make sense.
Yeah, and I'm
You're cool with
okay
it.
that if the trade doesn't happen, no trade is okay because it didn't fall within my parameters, right? And you also know that, you know what? If I do get filled and this trade is setting up, I know I'm going to have a great reward to risk, at least for the kind of trades we look for, right?
Oh, yeah.
The way I look at it, it's dumb for me not to enter this trade for this risk. It's like, it was worth it. Like if I lose, like you had a trade the other day, right? It didn't work out. It was yesterday, maybe, I think, on the puts. And then you got stopped out. And you're like, I got stopped. It's okay. It
Okay.
was worth
Yeah.
the
Okay.
risk was worth the reward. And then you got
Absolutely.
you did the same thing today and you got paid.
Oh, yeah. Handsomely.
Yeah, I mean, like all the 20, 30, 50x moves, right? Like amazing.
Once again, I'm okay
Yeah.
when my risk reward is where it's set up. That's the whole point. That's the system.
And you can do it because you're planning it, right?
Oh,
I'm
absolutely.
planning it. I'm planning what my payout's going to be. I'm figuring out, because of the way we analyze trades and the charts, I already know what I'm going to make on a trade. I could be wrong. I may not make it, but I have a pretty good idea of what I can make on a trade and how often they hit, right? And I'm taking fewer trades, right? When you're doing fewer trades because you're planning trades, it reduces the risk of executing more unplanned trades.
What's crazy is terms. That's the thing.
Yeah, the amazing thing is as folks have started adopting our process and have changed from the way they used to trade to the trading the way we teach, I've seen people go to 80, 90% win rates. Think about it. It's because you're trading less and you're doing the highest quality A+ setup trades, right? You're going, I only want the planned trades. I only want.
I love it. Absolutely.
So so that's what it looks like. It feels like. So it should really feel like, I mean, you're trading a lot less. It should be less stressful. You know what your entries are. You know what your exits are going to be if it works out, and you know what you're going to lose if you're wrong. And it's just going to be one way or another, right? You're already comfortable with the loss.
Absolutely.
Because you're kind of like, it's worth it. It's kind of like, it's worth taking this if I'm going to lose. It's like worth losing this because it was the right thing to do.
Absolutely, it is.
Right? It's absolutely the right thing to do. And if I'm wrong, I lose it. But think about that. Think about being happy when you lose on a trade and you feel good about it because you planned the trade and you're like, if I was right, I know what I was going to make.
It's executed properly. It doesn't matter. It's a small loss, right? It's a planned loss.
Yeah.
Because if I take, I know based on my risk reward setup, if I do well on one of 3 trades, I'm okay. When I hit 2 of 3, I'm awesome. 3 of 3, it's just knocked out the park.
Yeah.
I mean, it's easy. And if you get runners on it, and that's with no runners, by the way.
Yeah, and when you get runners, it can be
T1.
Really, really cool.
Yeah, that's just hitting, your first targets, which is fairly easy to do.
Yeah, that's actually very common for us. So, I think a few folks are wanting to talk about or see this whole, how was today's trade plan, or how was today's plan or trade planned out, right? So let's go into that.
Absolutely.
So, if you're not already a client, you know that so one of the things I do every morning is I create a watch list, and I have commentary and notes on the watch list, and then most of the time I do a pre-market prep video where I'm also talking about what my thoughts are and my plan is for the day. And so the price action today on SPY was that it was breaking 410 already, right? And it really needs to reclaim over that level and hold if we're going to get some sort of upside, right? It needs to really, really hold over that 410. And otherwise, I'm expecting a lot of downside, especially if we break 407, right? Big downside thing come. That was pretty much my plan. And so with that, let's take a look at what some of the price action looked like this morning. So when we're planning a trade, so we have this node, and we want to define a thesis, right? So my thesis is that I'm looking at the price action in the morning, and I'm kind of seeing, okay, it's dipped, it's pushed back, it's over 410. Can it hold? Nope, it slammed right back under 410.50. 410.50 is that you have the red to green line, the solid blue, and you have this dashed blue line, which is one of my levels. And you can see that if it was going to be strong today, it would have dipped, held 410.50, and then kept going higher. But it broke back below. Okay, so because of that, that's starting to tell us that, you know what, we might want to plan the downside because it's not holding over 410, right? It's not able to hold over 410. So I'm kind of like, hey, I can enter near 410. I can risk versus a new high a day. And, based on the levels, you can see I have another level down below at 404 that, if it breaks 407, it should at least go to 404. So when you think of it that way, if you're able to get in near 410 or 411 even, and the high a day is 412, not even 412, when you do all the math on that, say that you're getting in at 411 and your stop is at 412, that's $1 risk, right?
Yep.
Then if it breaks 407 and it goes to 404, then from 411 minus 404 is 7 points. So you're basically saying, hey, you know what? I can risk $1 for a possible $7 or better reward, right?
Beautiful, right?
It's then you're kind of like, okay, that's what this is saying. So I'm planning for the downside, right? Because that risk reward is great. And so I think we actually got in short this morning off the red to green line rejection, and we were looking for, then it popped and rejected 410 again. And we were looking for the morning lows to break, and so it came down into the previous low, locked some in, and then it popped and I got stopped. And then at that point, it was kind of like, okay, I'm going to need to wait because the strength of the selling is not there. And then we're like, okay, now I'm going to wait and see what happens. And I think you got in earlier and you just said, hey, if I'm wrong, I'm comfortable sitting on this all day. And so you had a different plan. And
I have to now. Yeah. I know the days I can't be in front of my monitor, so I just have to give it more space. My plan on those days is I go to a quarter size and I double my risk.
Yeah.
And then whatever happens, happens.
And that worked.
It just helps.
And it worked out.
Yeah.
And so then let's look at the next slide here. And then we're looking at the afternoon action. Okay. So this is where I'm watching this. I kind of have an idea of how this may play out. I'm watching when it started rallying after lunch. I was like, I'm going to call BS. I don't think that we're going to break out to 412. But let me see, right? So it was an okay risk reward on the red to green cross to maybe take a little bit long. And in case it wanted to push over the 412, 413 area, right? But I'm also watching and saying, hey, you know what? If this rejects, this is a great, phenomenal risk reward for an afternoon sell-off place to start. And, I saw the candles and the price action. It was indicating that, hey, this could dump. And this is where, when it started going red here, this is where I started positioning. And then this is also where I shared with our community my plan. And I had basically said, hey, guys, I think it was at the time $2.50, $3. And I said, I like the 40/70 puts. If you can get filled, I like entering anywhere between $1 to $1.50.
Yep.
It popped to I think $1.15, $1.30.
Yeah.
Okay.
Great opportunity to
Right.
enter.
And so I'm planning my entry when it's $2.50, $2, $2.50, $3. I'm already in, but I'm also letting others know that, based on I knowing how price action is and how things go, there's a great risk reward entry that you can get in at a better price than it is right now. So we're planning trades versus chasing. And because of that,
and the price action was already helping, saying, tell your story, right? It was reaffirming it because it was already starting to show that weakness.
It was showing the weakness. It came to $3.50, then popped all the way back to $1.50.
Yeah, it's beautiful.
And this is where then people got in. And those 40/70s, $1.50. I mean, $1.50, let's just say, right? If you got in, or even $2. These went to $50 from here. Right? And the plan, and I had said, hey guys, my plan is, for it to get 405 to 404, right? At that point, because of the way we had the price action recently, I wasn't sure if maybe we were going to get a little bit of bounce and chop. And so I wanted to make sure I locked in between $20 and $32. Guys, I'm in at $1.50. Why would I not take profit when I have over 10x? Yes, it can go more, but it's not guaranteed.
You'll do it again.
So I want to
take that money and run.
I want to
take
lock
that money and
in.
Run.
Right. And so that was kind of like the setup for this. I'm planning this because I'm looking at it and going, this comes back down to, think about it. If you can get into the 407 puts, right? And if it goes to 405 to 404, which tells us it's going to be anywhere between $20 and $30, and I can get in under $2, it's dumb not to take the trade because I've got an over 10x reward to that risk. But it's planning. I had to do the math, right? Because when you take 0-day contracts, it's choppy. Imagine getting it at $4, 10 contracts, suddenly it's $1, $1.50. Yeah. And you're going to be freaking out.
There's a lot, guys, math.
Right?
You got to do the math on these, right? Just math like any business.
Friend, right? Just with anything else. You want to know. And so we know how to plan this out. We know how to, join trends. And this was just an amazing opportunity. So that's how the thesis went, was basically we're planning it because of the price action, right? And because of the levels. Look, this is not able to get over my 410.50 level. It's not.
I would have asked for a better trade to happen on the day we're talking about planning trades.
And so I'm like, okay, hey, if it can't get over here, then I'm already making the assumption that it's going to go to my levels. Because how often does it go to my levels?
At least 3 times a day, it feels like.
Pretty often, right? And then when my risk reward is over 10x, if it goes to the levels, it's dumb not to take the trade, right? And those are the kind of trades I love, when it's dumb to not take the trade. And because even if it got just to 407 and I'm in at like $1 or $2, and it's hitting 407, I should at least be able to sell it for $5 or $6. And that's how it moves, right? And so it's like, great, right? You got at least 3x reward you're gonna get. Take that. You take those trades. And so that's how I planned this morning at trade. And let's take a look at what actually happened. Look at that.
How did it end up?
It rejected.
What did the dump look like when it got flushed down the toilet?
Came back and gave us that amazing entry between $1, $1.50, and then flush city. Boom, boom, and then continuing on for that
just
toward that.
Just some Tom Petty. Free falling, baby.
This was just phenomenal, right? And then, we even planned this bounce. This hit $18 exactly, which was my first sell order. Then watching the price action, and then I said, hey guys, let's pop it, getting back in or adding more, right? Because I strongly believe this could happen, and there's a decent chance that this will break and give us even more toward the end. And so at this point, this is also a place where one can roll into the 405s here. And those went, I think those were like $1.50, $2 on the 405s right into this pop. And then those kind of went $30. It's crazy.
It's amazing.
Or maybe they were $3. I think maybe 3 into this. I can't remember. But you can plan these trades, guys. And that's what you want to do, right? You want to have the levels that we make for our analysis is, I think, pretty incredible. I think which one was it? Amazon today. I don't have the level to chart up here on for the show, but my target and level for was 116.
Yeah.
Guess where it closed today?
116.15.
Yeah. And so when it broke
Gorgeous.
119, it broke 119, you can plan using the levels. Where is it going to go?
Which was your other level? 119, boom,
116,
right
yeah.
to 116.
And so when it broke 119, it's going to 116. Think about that. Knowing that knowing where it's supposed to go, right? It doesn't have to go. But where it's supposed to go, let you analyze. And it alleviates a lot of the what if, the angst, should I get out? Should I not get out? I'm like, no. Hey, when it gets to level, I'm going to get out. I'm going to lock
That's a $60 move in Amazon, guys. Don't let that be scare you there.
Yeah.
That we're talking $3 on Amazon, but that's actually a $60 move
from the old stock. Of course, you have to go use 20 contracts instead of one now.
But it's $100. It's beautiful.
Yeah.
It's everyone can trade it, right?
Yeah.
I mean, it's a quarter size to SPY.
And so it's, so the levels are so, if you have not tried the levels out in the analysis, please do it. Give it a shot. Start paying attention to what, when there's momentum, these levels are amazing. When there's no momentum, the levels may not hit, right? And there's going to be days like that in the year. But I think from my experience, there's roughly 20 to 40 days a year where the volume and momentum in trading just isn't there, right? And
that's across the board, right?
That's across the board, yeah. I mean, so that's gonna be stuff. We'll find stuff in.
It's normal.
We'll find that in other trades or other tickers where the opportunity is still there. But the point is, you make that part of your business. You plan for that, right? And so when
you go into a first target mode, you take first targets. Take more off instead of maybe a third. You take 50% off at the first target, and you see what happens.
And
right,
so
break even, stop, lock it in.
There's ways to manage it, absolutely. Yeah. So
a couple quick tips for them.
Yeah, no.
That's how I like to do it.
So let's speaking of tips, let's talk about another $100,000 tip, right? And why I believe these tips are worth that is that because if you incorporate this into the way you trade, it's well worth this, right? And so planned losses are a part of the business, and knowing your win rate lets you accept a planned loss. And you had a couple of thoughts on this when we were making the slides, David.
Yeah, I mean, I think planned losses are, as I said, they're part of the business. It's just it's so important to be okay with it, right? You can't go into a business of trading knowing or thinking you're going to win every time. You have to be happy losing, because if your math is correct, you're going to be uber successful, right? And if you are tracking your performance, you know what your math should be, right? So I can look historically and project out. And I can use math as my friend to say, hey, what loss is a great loss for me to take? Because I know when I take X number of trades, here's going to be the result long term. Yeah. So for me, I'm okay with it.
You got to know your win rate, because if you know your win rate is, say, 70%, right? And you know that when you do win, you typically make 200, 300, 500% of your risk, then you don't even care about losing, right? Because you know that when you win, one win is going to pay for 2 or 3 losses. So it doesn't matter, right? It's just one. You're just one trade closer to your next win, right? That's really what it is. You're just one trade closer to your next win. And knowing that and having the faith that that's the situation makes it a lot easier for you to just say, hey, you know what, this trade didn't work, I'm taking the loss.
Yeah.
Right.
For sure.
But all of this will only happen if you're able to plan your trades out, because that's the only way you're going to have consistency in your numbers.
Yeah. Like I just pulled up my account, so I don't know if everyone knows, but I generally bring my account down, my income day trading account down to 10 to 30, somewhere in there at the start of every month. I started this month at 10 again. Right now, my average actually win rate's a little lower than normal. It's around 68%. It is 67.8 exact. My largest loss, $725. My largest loss, guys, $725. My average losing trade, $141.32. It's not a lot of money, guys. Now let's look at the other side of it. My largest winning trade, $3,890. It's okay. It's not that huge. And that's per on a contract basis. So that was a one contract win. The average winning trade is 399.25. So I'm averaging about 400. And my average loss is about 140. So it's not bad. It's not perfect. Could be better.
Great. But it's not, but it's
Could
great.
be better.
It's a 3x. It sounds roughly 3x.
It's roughly, like I said, it's but once again, my win rate's a little lower than normal for me, right?
Mm-hmm.
So I'm down, which is why. But guys, know your stats. Be able to pull it up. I have a spreadsheet. I just go to it. Track your stuff.
It's so important.
So important.
So we're going to talk more about these in more episodes as they come. I want to say thank you to everyone coming and joining us. And you know, when you're looking to start to trade, when you're looking to shift your trading from ad hoc to really thinking about it as a business of trading, you don't need to start it from scratch. You know, you can start your 2-hour trading business, and that's what THT is all about. I spend a lot less time at screens, and because we can plan our trades, set alerts, and be smart about our trading, and really, you know, we've got a repeatable process and set of rules and analysis that it can really help you if you want to learn to have a trading business. You know, you should definitely reach out to us.
Absolutely, we're here to help. Love to help.
Oh yeah, it's amazing. Nothing makes me happier than when I see folks like
doing well, understanding it, it's
changing,
clicking. When
planning.
that aha moment happens, it's amazing. It is.
It's so incredible. So I want to thank everyone for coming and joining us. Be sure to share this with your friends if you found it useful. Please let us know. Be sure to like, comment, reply to Twitter or Facebook, where you may have seen the links for this. But really follow, share, subscribe. Let your friends know about what we're doing. We want to make more traders profitable. We want them to. I want people to not live for
join us
trading. Yeah. To go live, right? I want to see people trade, make some money, and then go enjoy their lives, right? Go do things that are fun. I'm super excited. I got a couple friends flying in. One from Switzerland, one from New York, New Jersey, and we're gonna go have a fun weekend, and so it's gonna be exciting. Amazing. And so that's what it's for.
Yeah. Anyone listening, if you have any further questions, you should appreciate your questions. Glad we got those answered. If you want any help, please let us know. Guys, we love the questions. Please interact with us, whether it's via Discord, our YouTube, Facebook, Twitter. Feel free to reach out to us. Okay. Can't wait to see you next week, and let's get ready for the markets tomorrow. It's going to be a fun Friday.
Yeah, see everyone tomorrow, or take care. Bye-bye.